Okay, AP, we will move to the open interest section.
Yeah.
And as it says, it relates to all the open interest related uh, features.
Yeah.
Because there are many ways to analyze open interest, and we have different features to analyze those things, so that it can be incorporated as part of the trading, which can be based on open interest.
And all of this is for pro, right?
I will tell some of them are for pro, some of them are for both.
Okay.
So, for example, open interest here is free,
Yeah.
but there is a 15-minute delay for
Free.
free version. So now this is the open interest here. It's pretty straightforward. Here we are showing the OI chart of different strikes of both calls and put options in red, call options in green,
Yeah.
and here it's price, the last trading prices of put options and call options of different strikes. And this is change in OI and this is OI. Now,
Yeah.
if you hover, it will show you all the data that is pertaining to that particular chart. Like what is the call options OI, what is the PCR, change in OI, and also tells the delta value of that particular option strike, delta
Right.
and theta both. So we are going to add some more features there. And here you can change your expiry of which you want to look at. And here it will show the PCR, max pain, modified max pain, and then lot size. And here also you can scrub through different FNO stocks and indices by going back and forth.
Yeah.
Okay. Now within this, the three tabs. So first one is the open interest, and then we have this OI buildup. In the
Yeah.
OI buildup, we have something called as it's a new way of looking at the OI buildup data. Because what happens is that some people show this kind of OI buildup, in a tabular format in the option chain itself.
Right.
But that is kind of very, it's okay, but it's not very intuitive for analysis point of view. So what we did is that we took the same thing, but we showed in a pictorial format, one above the other of the same strike price, and what is happening in each one of them, in
Yeah.
the put options as well as call options. So, and again here they have four different ways of the option buildup: long buildup, short covering, short buildup, and long unwinding. So if it is red means that longs are unwinding or the shorts are building up, and if they are green means longs are building or short covering is happening. Now just by looking this, you can quickly say that the market is very bearish. So
Yeah.
now you have to look this from the perspective of an option seller, that they are in the control of the market and
Right.
not the option buyers. Now if you look at this short build-up in the call options, it tells you that from 17,300 to 18,400, everywhere there is a short build-up in call options because they're very bearish. The option writers are very bearish on the market,
Right.
and at the same time, we also see that people are buying options out of the money option, at the money and out of the money options in the put options. And there is a short covering of put options which are deep in the money,
Right. And this
because
is on manual refresh, right?
yeah, no, this updates every 1 minute.
Okay.
So now as you can see that just by looking at this, what is the status of that particular index or a stock option
Right.
from the options perspective. So unless you see some green here, some green in the sense like there is some short covering or say there is some long buildups, that it is indicating that the market is going to stay bearish till that happens. Till
Right.
that so unless that green shoots are available or seen here in the call option part, the market has not reversed.
Maybe you can show Bajaj Auto, which was up, I think, on Friday. So maybe that was
Or even
showing
Maruti maybe.
Maruti, yeah. Because Nifty was definitely bearish. Yeah. So here there's a
Yeah.
different picture.
Yeah, here you can see the Maruti is bullish. There is
Yeah.
a short covering of call options,
Correct.
which means as the price was going up, whoever shorted the call options, they're covering because they fear that they may not be able to withstand an increase in the price action,
And even
the
the puts are
bullish
showing
price
a
action.
short build up.
Yeah, exactly. And there are build up in put options. So both ways, it is indicating that it is bullish, and there is
Yeah.
a
And once you correlate it with the current price, which is here, futures price, so that will help
yes,
to identify which strike price to look for.
yes, exactly.
Yeah.
So somewhere here will be at the money option,
Correct.
and then there is a build up in some of the call options.
Hmm.
So that's how you have to read this data of options and their build up because it pictorially, it immediately tells what is happening.
Correct.
So you don't have to, put your mind and see what is happening. Only maybe in sideways market, maybe there will not be much clarity at that point of time.
Yeah.
But if there is a clear trend, you will see some clear picture here. Now, the third tab is a max pen, right? The max pen tells you what is the strike price at which the option buyer has a maximum pain and the option seller has a minimum pain. Okay, because this is where the option sellers benefit the most
Most. Yeah.
by writing the options over the other strikes. Okay, so that is what it tells. So the belief is that the option writers somehow control, the underlying stock or the underlying market and try to bring the market close to this max pain value at the expiry. So that is the reason, we also show this max pain chart.
Yeah. So basically, it means that even though Maruti looks bullish right now, it might expire near 8,000 as of now.
Yes, as of now, 7,800 actually.
Yeah. Sorry.
And if you look at modified max pain, which takes only the top five option strikes by open
Hmm.
interest to calculate the max pain, it
Yeah.
says that around 8,100.
Okay.
So this max pain is slow to move, and modified max pain it moves much more faster according
Correct.
to the stock price.
Hmm.
Okay,
Okay.
so
Fine. Yeah.
the